ED and Global Chief Finance Officer, I beg your pardon, at Glenmark Pharma, joining in on the show right now. Mr. Mani, great to have you on the show. Thank you so much for taking the time out.
Yeah,
I'm
good
just
morning
looking
to
at the second
everybody.
quarter performance, and the price erosion for the US business stood at about 6 to 7%, is what you've indicated in your conference call. What I want to understand is whether the worst is behind you, or in the second half, do you see an escalation of price erosion for US?
So as you can see across all the companies, in the sector, there is definitely some amount of price, erosion across, and largely in higher single digit. So we still see about a 6 to 7% that has happened so far. And going forward, I think the second half should be definitely better than the first half. This is our view, okay? I mean, in terms of at least our sales and revenue, margin erosion has been pretty constant in the US for the last 3 to 4 years. So I think, but barring that, still the second half, we believe with a couple of decent product launches by Q4, we should definitely see a more improved growth in the US.
Sure. You'd also guided for about a 10 to 15% CAGR growth in the business over the next 3 to 5 years. Where is this optimism stepping in from, and what do you think is going to contribute to these growth numbers?
So sure. So first, let me explain the current quarter, okay, and first half year. So it will give you some visibility how we are thinking. So in the current quarter, we had sales of about 3,147 crores, a growth of about 6.6%. But for the first half, if you look at it, we had a sales of about 6,110 crores with a growth of almost 15.4%. Okay, so that way it's been quite okay. Our margins were also at about 19%. Okay, so for both the quarter as well as for the first half of the year. In fact, even our debt, we have managed to if you look at it, we have a net debt of about 2,160, which is lower by about 1,400 crores. Basically, a combination of internal accruals and the capital raise that we did. And obviously, looking at all this, and we had certain objectives for us to grow at about 10 to 15%. So if you look at it, and also the margins, we had a sustainable margin. We thought about like FY21 at about 19%, as well as debt reduction of almost 1,600 crores. So I think many of the objectives we've been able to progress well in the first half of the current year. So, and also on the back of a number of good product launches that we see coming up in the next couple of years, we definitely are optimistic about a growth in excess of 10%. Yeah.
So if I were to take that guidance of the CAGR that you just talked about, so can you tell us a little bit of what it's going to mean for the margins that you've guided for? That's 19%. Will there be an impact on that?
No, we don't see, we definitely see ourselves, having done a lot of work on both the products as well as on the efficiency side, we definitely see us, kind of maintaining these margins, okay? Definitely keeping it at about 19%. So as you can see we have been launching, our respiratory pipeline product, Ryaltris, across various geographies. So it's our first global launch across various geographies. It's been doing quite well. We launched Tiotropium DPI across various geographies in the Europe. So we have again some launches in both these products across various countries in the Europe. We have a PDUFA goal date in the US for our Ryaltris also. Some come in Jan 22. So we are pretty much backed by good products and good launches over the next couple of years. So I think therefore that's where this confidence comes from in growing about 10% or 10 to 15%, and also maintaining our margins at about 19%.
Okay. So the growth, the CAGR terms likely to go up, margins still the same guidance of about 19%. If I can talk to you specifically about your India business, you talked about a healthy global pipeline that you have as far as launches go and how the other geographies have done. But if I see the India formulation business, there's been a downtick of about 7 to 8% year on year. Thank God, no third wave. But is that the reason why this has taken place? The COVID effect going away?
I could explain that better. So if you look at India business, if you take only the non-COVID drugs, and if you look at what IQVIA has reported, we are, if you look at on MAT September, we are the fastest growing, among the top 20 companies, we're the fastest growing company. We, if you were to remove the non-COVID drugs, we have grown on the base business at about 16.7%, okay? And if you look at overall in the first half, we've been growing around similar levels or more. So I think therefore you'll have to kind of, this quarter was obviously not much of COVID in India. So, but still the base business grew at well at about 16 to 17%. So, and also we had a couple of interesting launches in India. If you look at it, a number of launches, but two important ones. One was subutetraconazole, that is the antifungal. Also, we launched the remogliflozin, that is the triple combination. So it's always backed by a number of good product launches, and that's how it helps us to keep our growth pretty well. And it's borne by the fact that on a MAT basis, we are still the fastest growing company in the top 20.
FCF, do you expect it to increase, say, by FY23 or 24? Because I'm guessing that's also going to primarily be used for debt reduction too.
Yeah, I mean, obviously, as we go along, as and when the business grows and we are generating free cash, we'll obviously use it to we'll mix it between growing the business as well as reducing our debt as well. But today, if you really look at it at a net debt of 2,160, and in the first half we have a EBITDA well in excess of 1,100 plus crores. I mean, we are almost less than one time EBITDA for the full year. So I think we're pretty much in a good space right now.
Sure. In your con call as well, you were pretty bullish about prospects of growth kicking in. Help us understand if you're looking at expanding capacities as well, either brownfield or greenfield.
So I think obviously in our API sector, API side, we already announced that we will definitely do some expansion of capacity on the greenfield side. Putting up a new plant in somewhere in Maharashtra. As well as in our formulation side, we obviously, it's an ongoing thing. We already have a number of plants. So putting up new lines, etc., to meet your capacity requirements is a very normal thing. So obviously, we feel we have enough capacities, and as and when we require, we can add on to it. But nothing very substantive in terms of the formulation side that we're going to put up some, huge, because we already have capacities in place, and that should be able to help us meet our requirements.
So when you talk about increasing your guidance and the deal pipeline that you actually have, can you give us a little bit of an idea of the kind of geographies that you're focusing on? And the reason I'll tell you why I'm asking this, up to a couple of weeks ago, there was a conversation that have pharma stocks topped out, but there's still so much opportunity that exists for API related stocks.
So obviously, as you can see, our API business has been doing quite well. Even in current quarter also, we did quite well. We have an EBITDA margin in excess of 30%. So I think API is one business that's been doing quite okay, though there could be temporary, headwinds once in a while. But obviously, the business is quite good. But apart from that, if you look at it, just to give you a feedback, our India business has always been doing quite well. We've been growing at about 12 to 13% over the last couple of years, and if you can see, even we've improved our rank now from 14 to 13. And besides this, there are a number of geographies in the ROW markets also where we've been doing quite well, be it Russia, CIS, or MEA, that is Middle East Africa, and obviously US has been one focus area. In spite of few challenges, it's still a good business to have. And Europe is some place where we have launched a number of good products. As you can see in the current year, second half, as well as for next year as well, with these launches of Ryaltris and Tiotropium and a couple of other products, we see a good growth. So this is how we kind of, slice and dice our business.
I apologize for coming back to the same question of margins, but this is the big theme of the earnings season, isn't it? And it's a global problem where we've seen supply disruptions leading to inflation also of raw material costs. So when you talk of growing more and maintaining the margins, I'm assuming price hikes are imminent.
See, there are two things. Not everywhere you can achieve a price hike. Obviously, markets are competitive as well, and like US is almost 30% plus our business, where we alluded to the fact that there are always margin pressures there. But obviously, there are certain other geographies where you're able to maintain your margins well. But also as an organization, everyone works a lot on the cost efficiency side also. And as you can see, we are quite backward integrated as well in some of the products. So I think a combination of all this actually helps you to maintain your margins, and sometimes even improve that. So I think, in a way, in a sector like pharmaceutical where you can really work on your cost side well, actually it will help you to get back on your margins if you're losing anything. As far as supply disruption, etc., is concerned, obviously all companies have worked a lot on their working capital as well to ensure that there is adequate availability of working capital to take care of it. Also, you must be aware that the freight rates have been slightly on the higher side, but people again have been smart enough to work on a mix of air versus sea and taking advantage of overall production cycles to ensure that you meet the market requirements are all met. So I think it's a combination of things. I think one needs to really work a lot on the efficiency side to ensure that you are able to be very competitive. Okay.
Mr. Mani, great to speak with you today, and thanks for taking the time out and joining in.